Hey everyone, and welcome to episode 1 of the Capital and Context podcast. Our newly launched potential client, any audience member wanting to learn a little bit about what's going on in the world. It will be investment focused, this podcast. Firstly, to introduce ourselves, I'm Mark Insley, founder and director of Ascot Wealth, and these days more of a chair of Cape Berkshire Asset Management, our investment business. And Sam, I'll let you introduce yourself.
Yeah, hi. So I'm Sam Hallett. I'm the Chief Investment Officer at Cape Berkshire Asset Management. I've been working with Mark now for I think just over 8 years now, and been managing the portfolios now for getting close to 5. So nice bit of track record there.
Absolutely. And yeah, we're gonna try to keep this a weekly blast. We're fortunate enough to have a podcast studio in our office now, so we thought, why not? Let's be consistent with this, and for our different audiences, get out some intelligence. Me and Sam have so many cross the desk conversations downstairs that we thought some of that would be nice to put out, and not make it super long, but try to give you a weekly snap of what is going on inside a portfolio manager's head. And please feedback to us directly, comment in the YouTube, etc. If you want us to talk about particular things and things, these things only grow with feedback from the listeners. So starting topic, Sam, geopolitics. We always sort of say to clients, there's always something going on in the world. There's always some form of geopolitics. But one thing you've said to me this week is it feels different this time. So could you just expand a bit further on what you mean by that?
So I think I'll go into a little bit further detail later on. But our top view is that it's not the fact that there's any one thing going on at the moment. It's the fact that we have concurrent issues going on around the world, and that the time frame for these things to crop up used to be like 1 or 2 a year. Yeah. We've got 3 happening in the space of 3 weeks. We've had the US intervention in Venezuela, which was actually their biggest solo operation military since before the 90s even. Closest parallel to that is the US intervention in Panama. There was over 100,000 personnel involved in that operation. It was a huge scale. And then, of course, we've got Greenland, and we'll go into that in further detail later on, no doubt. But also the fact that we've just had the conclusion of Chinese exercises in the Taiwan Strait. And, of course, with the continuing conflict within Ukraine, it's the fact that what was a bit concerning towards the end of last week was the potential for all of these matters to happen all at the same time, and that changes how we have to think about portfolio positioning. It isn't just a single area.
Is that why you kept calling me on Sunday?
As we know, within this industry, there's no such thing as an 8 to 5.
No, we had a good chat with some of that on Sunday. So when Sam calls me on a Sunday, I know his brain's going a million miles an hour, and something's important to talk about there, really.
Yeah, certainly.
And the third?
Pardon?
And the third?
Yeah, the third, as I said, was Taiwan, but you've got it's the fact that all of these matters may happen all together, and it just changes how you have to think about portfolio positioning.
I think sort of taking the first of those, so Venezuela, I mean, these are the types of snippets I think that would be useful for audiences. I think that's the first time I've heard that there were 100,000 people involved in the operation. I think to me, who still obviously has my head in the news, but I thought it was a bit more of a covert operation. But so could you expand a bit more on Venezuela and why it matters to investors, and just give a bit more insight into a few of those comments?
So to just start, it's 100,000 personnel. That includes obviously all the support staff in behind the actual frontline service people. It's less, but it was still 150 aircraft, and it was a full carrier strike group involved. It was huge. But the reason why it hugely matters isn't necessarily the immediate implications. It's the breaking down of international norms and the fact that there was no there was no trying to be seen that the justification for the operation was humanitarian or similar.
And the 3 months before, had there been noise on this, or was that, and again, another factor that it kind of just was so to the point and clinical?
There was build up to it. There have been discussions about as I said, we had naval kind of, we've had obviously the capture of oil tankers happening, but that's very different to action in literally removing a head of state.
Yeah.
Removing a head of state through military action is very, very abnormal, certainly post 1945. And the reason why that's important is because obviously US made all of these institutions, but they're breaking them down, and it's starting to give justification to other states, read China, with not needing to have an excuse beyond pure self-interest to go and take over Taiwan. With after the Venezuela intervention, Trump literally said, "It's about oil." I'm paraphrasing a little bit, but if you could clearly see the press conference a day or two afterwards, he says very clearly that an awful lot of this is economic related. But how it's the breaking down of social political.
It was very like, this has secured this for the US for the next X amount of years. This was a huge, obviously always sells his actions after. So Venezuela significant enough, and obviously, but didn't really shake the markets. As such. What was your take on that?
Because Venezuelan oil is, although they have massive reserves because of US sanctions, from memory, was from the time of Trump Mark 1, let's say.
Yeah.
The facilities for the oil extraction, etc., hadn't had any investment, were breaking down a bit, etc., etc. So the actual extraction rate wasn't particularly high, but it was still being bought by China and Russia.
Yeah.
Hence the whole, if you've seen the news, talk about the shadow fleet, which we can go into, but possibly not for right now. Sure. So it more affects those particular markets than it does, say, the open market. Venezuelan oil wasn't really marketed on the open market. It might do in the more medium term, so like 5 years plus, if investments into those facilities comes back into Venezuela. And obviously, higher extraction rate means lower oil price if demand is static. Yeah. But at the moment, not masses. It's more about what does this mean for other things going on in the world.
Okay. One that perhaps was a little bit more premeditated, from again some of the things I've sort of read and seen, but sort of Trump's son's spending lots of time in Greenland, many months, and think year, I don't even know whether it's years or months ago, and I think before his death, Charlie Kirk was also podcasting on there being a bigger plot and reasoning and plan and stuff behind that. So what's bring us up to speed with Greenland. So much has gone on the last weekend there that you could run a whole episode on that. So I think on these points, just
easily
give us what you think the impact is and what the next potential steps are.
So I'll try to keep this fairly short because everyone in the office has probably got rather bored of me talking about Greenland a little bit, but obviously our audience for this is different. So today is Thursday. It's the Davos summit this week. So Davos is very much a multilateral summit held for the week in Switzerland. It's not just political actors, it's also business leaders and other activist groups, etc. It's kind of a one-stop shop kind of summit. And it's been quite interesting. So as of today, yesterday was So there's something that if you haven't heard of called Trump always chickens out, or the taco trade. So today I have bought my tacos ready for it. So basically it looks like after Trump's speech yesterday, we're not going to have military intervention going on in Greenland, which is frankly a massive relief. We were having to contingency plan for that with where we were heading in portfolios. And the problem with that was that the emails that was having to go out to into our managers and what's going on in that land is we had to find out where are the assets custodianed, all of these kind of things. Because if things carried on ramping up where we were going, what would that mean for breakdown of the financial system? You know, but at the moment, Trump is now offering each Greenland citizen $1 million each to basically try to sweeten them into doing it. It was 100,000 US, but it originally started off under the context of, look, Greenland needs to be more heavily defended against China and Russia. Okay, but there is a treaty in place between the US and Denmark that they allowed to literally put as many troops, as many bases as they actually want on the island. So this is literally almost entirely
the strategic military element is not the factor, which is what you've been saying to me for days and weeks, to be honest.
This in essence it boils down to is rare mineral
resources
access.
And,
this is what it boils down to.
Okay, and then the third, you want to quickly touch on Taiwan? I know that maybe you'll say, I'm going to predict that you're going to say that's less of a factor if Greenland didn't escalate. Is that still your view now midweek?
Yeah, so the thing that's very much good now is if the Greenland military action had taken place, it kind of removed any kind of worry that China needed to put in any kind of nice context to go into China, into Taiwan, and not just that, whilst the US is distracted, because Greenland could have been a fairly major conflict. Whilst the US is distracted, going to Taiwan whilst it's good, and not just that, we're at the time of year right now when the weather is right for that intervention to take place. But yeah, there was one moment last week that was a bit scary with contingency planning, but I think now things backed off. It's not any one issue that the risks have come down a bit. I think it's a lot of global things where the risks geopolitically have chilled out a little bit, which is a massive relief because it would have been very hard to diversify portfolios for such a situation. Although we have been doing quite a few things over the last 4 or 5 months to be ready for such a scenario. Yeah,
and again, maybe over time this podcast will be a Thursday investment signal for certain things. So I hope you've already placed our portfolio trades if this is a factor. But I know one area you went back to heavy research on end of last week, start of this week was a position that we kind of come in and out of. We either it's either not a love-hate position, but it's something we either hold decently or don't hold at all, which is India. So did you do anything in that space, or have you got any plans? And why do you think India could be a potential option for situations like this? Because my prediction is they're not going to go away. They might go down, but geopolitics, as you've said to me, is it's going to be a whole theme for an extended period. It's not a flash in the pan topic. So why does India maybe suit multi-asset portfolios?
So as you said, we've held in the past. We came out for 2 reasons. One was an operational reason. The settlement time, if you were buying or selling the fund, was a little bit too long. So therefore, it was making client withdrawals a little bit more tricky. There's not many specialist India funds with good knowledge actually on the ground. This is one of basically two that we've typically used. But to go over your first question, so have continued that research this week. So have met the fund manager of Alchemy India on Tuesday. And what was really good from that meeting is, first of all, when I do these meetings, I always try to frame them at a layer above. So
Yeah.
obviously, if you're going to meet an India manager, they're going to want to sell you India. So very much try to frame the call more from the standpoint of emerging markets in general. Ooh, touching the mic, and but going a bit within that, it's taking out any nuggets from that. India, I think, is now actually a good time. So from a bit more of a besides the current environment, which I'll come on to as the second part, it is the amount of bank lending is starting to increase again. India, which is normally a precipitator to increase growth. Now, India is still growing at something like 6.4% per annum. It's just overtaken Japan to be the world's fourth largest economy. And not just that, it's the way that the economy is growing now. It's quite actually broad. It's been very narrow sectors.
Yeah.
And so that's one of the things that's looking quite good. And not just that, it had a bit of a contraction from an earnings multiple value standpoint last year, which means that which was needed. India had got expensive, which is why we weren't holding. But I come back, and I think now might be a more reasonable time to come back in. We still hold India within Artemis Smart Gap.
Yeah.
It's about an 8% holding within that, of course, within a wider EM fund. But going back in as a standalone holding, I think has been helped pushed along by the fact that India is very much part of the non-aligned movement. So it tries to keep everyone friendly, but not necessarily in their back pocket. So that if a relationship were to break down, it wouldn't be the end of the world for them. And not just that, they've already been quite a beneficiary of the China offshoring, the China plus one kind of thing. So that's probably going to continue. But there will also possibly now be, with the breakdown in relations, the breakdown relations between the US and Europe is now permanent. This is not, okay, it's right, we'll get over it and next week we'll have drinks. This is then genuinely going to cause a distancing between the two. India's probably, as I said, because they try to keep friendly with everyone, and they are the fourth now at least size economy in the world, probably got the most to benefit from all of this.
I think when Trump starts trolling people on their choice of sunglasses and things, you're right. There's a bit deeper relationship conflict.
Absolutely.
Yeah. So in India is one we'll keep you updated on and what we do with that as Cape Berkshire Asset Management. Obviously not going into every position. We'll explore the portfolio a bit more probably in other future sessions. But anything else you want to sort of put out there, sort of geopolitics wise, as to how you have or you may put into action in the coming week, 10 days.
Coming week, 10 days, possibly not. But the things to keep an eye out on is one of the things bear in mind with how Trump's been acting over the last last month or so, is the fact this year is the US midterm elections, and they don't look like they're going to go very well for Republicans. So is there an element of he's being quite aggressive with a lot of things, whilst he knows he can get away with things before Senate/Congress swings the other way and he becomes a lame duck president for the last 2 years of his final term.
But yeah, as I always sort of say to you in these times, it's there's always noise, there's always some problem, always clients that why did you not hold that scenarios, but still the portfolios have made a decent start to the year, really. So I think that's one message we've tried to make sure is still delivered to the advisor teams at Ascot Wealth, that don't just talk negativity on the world, because and also again, I guess it's more with my advisor hat on than my Cape Berkshire hat on, but ultimately long-term investment in our view is holding through multiple periods, and I think the last 2-3 years again has been a reflection of that. And with what's been going on in the world, anyone would have thought markets would be down 5% this year, but we're not. We're nearly 3% up on portfolio 5, and we've actually had another positive year. So I guess, sorry, long-winded question there is, yeah, for anyone that's an advisor or, you know, anyone that sort of has a role feeding stuff back to clients, what would you, you know, what would you add as some dialogue for advisors to be relaying about the current world and I guess just the topics we've spoken about on today's session?
So there's two sides of that. One is the fact that we were very active towards the end of last year with adding diversifying elements, and those are things that just aren't correlated. They're designed not to be correlated. So there was the Jupiter absolute equity return, which is designed very much to, it revolves around derivatives, contracts, etc. So that, you know, a negative market movement might actually be positive, not just that in the fixed income, so bond space.
Yeah. For
getting close to a year now, we've been holding Man Credit Opportunities Alternative. A few of the words might be a bit jumbled up, but it's that's what we've been holding there. So actually, in a negative environment, that should do rather well.
Yeah.
But also moving away from negative things at the moment, been wary that we've actually been quite negative in this, is the fact that there's lots of reasons to be positive in terms of company earnings for the year. The US has an awful lot going for it in terms of tax breaks. A lot of what went through in last year's budget was actually retrospective.
Yeah.
So this year, practically every single US citizen is going to get quite a significant tax rebate check for very soon to now, actually.
Yeah.
So consumer spending help carry that on through in the US. We've got other US tax breaks for corporates, so it's going to act very, very well. Europe, everyone's announcements last year about increasing defense spending and other elements, they take time to feed through, but we will start to see that towards the end of this year in actual earnings picking up. And not just that, China's coming back on song. We're getting to the end of the issues around property.
Yeah.
But so that's good. As I said, India's picking up. There's lots of reasons to be positive about emerging markets.
I'll jot these all down as future topics for the coming weeks.
There's stacks. That's the thing. If we do this weekly, it's a good thing that we've got plenty of topics at the moment. So yeah, plenty of good reasons for portfolio. It was just like the first few weeks threw a little bit of a curveball, but we were ready in large part, and not just that, we've scenario planned it. So we knew what we were going to do in such a situation.
Well, hopefully some useful words there for our advisors and other advisors that take the time to listen in to this. I'd love to do a session. I think we made a good collective call, and everyone was, in our opinion, over dramatic at that point in time on the AI bubble. So I think it'd be good 2 months on from that where we elected to not reduce any risk in the portfolios, and that's, I think, worked out very well for us. I think it'd be good to do a digest again on that, in a couple of weeks or something. So yeah, but no, conscious we don't want to make these super long sessions. We want people to put these on a train ride home or a drive home from work, as I tell all my staff to use that dead time as efficiently as they can. A hint. But no, thank you very much, Sam. I know you're super busy at the minute, juggling lots of plates. But yeah, appreciate you putting the time into kicking this off, and let's keep it consistent and hopefully be a useful tool for clients and a wider audience.
Absolutely. Thank you for inviting me.
Yeah. All right. Thank you very much, guys.
Cheers.